Hey everyone, I'm Cary Smith and I'm with Client First Capital and I'm sitting here with Cheri Turner.
Right.
And so if you're watching this, you're watching probably because you're wanting to know more about various financial topics. And today, I think we have a really good topic on tap for you. Um, Let me start this way. If you're about the time that you take your live Christmas tree and you haul it out to the curb to be picked up, or you put it in a bag and you store it with all your other Christmas ornaments, about the time you get all of that done, your next thought is, oh no, I have to be thinking about taxes. And so our topic today is to help prepare you for tax season. And so our topic is smart moves to make before tax season starts. And
Yes.
so I'm sitting here with Cheri, who's one of the experts on this subject. And Cheri, I know I'm going to want to make some comments along the way, but you really are the expert. So I'm going to just have you kick us off and get us started.
All right, great. Sounds good. Well, as we all know, tax season can be tremendously stressful, especially if we don't find ourselves prepared or we're scrambling to do things at the last minute. So, one of the very first things that we like to suggest is to organize your financial documents early. One of the best and easiest ways to do this is to create and utilize an actual checklist for your documents. Ensure that you have any W 2s, 1099s, charitable contribution receipts if you've made charitable contributions this year. Ensure you have a statement for your mortgage interest deduction and such. Once you have that checklist and have it completed, then you kind of know that you're ready for the next step.
I
The
feel
next
like
step.
my CPA told you to add that comment because he tells me stories of people that come in and just have like having a plastic grocery bag,
Oh, right.
all of these papers and receipts, and then he's got to go back to them for other things they forgot, right? And
Mm-hmm.
so, yeah, I
Mm-hmm.
think that's probably a pretty good place to start.
Yes. One thing that I do recommend is when you have those documents, do take them and compare them to the statements that you received over the year and just kind of do a cross reference and ensure that the numbers are in fact consistent. Another thing that we recommend is there are a lot of secure apps out there or secure cloud storage where you can actually take those documents and have them all saved in one central location. This makes it easy for your reference as you need to go back, but it also makes it easy for a lot of times your tax preparer or CPA might ask that you upload their documents to their secure server. So in that case, you have those all sort of available and ready in one place.
Yeah, that sounds a lot like the vault that we have here at Client
Yes.
First Capital, where our clients can securely upload documents, and only the only people who can see them are themselves and whoever they give access to,
Right.
right? And especially when we're getting tax forms and helping people with tax strategies and so forth, it's a way for them to get information to us, but in a very secure and safe way. Yeah.
Yes, absolutely. Absolutely. The next thing you want to do is ensure that you're optimizing your contributions to your retirement accounts. If you're able, you want to be contributing the maximum. And I know we've talked about this before, but this is the best way to reduce your tax burden and best prepare you for retirement. So, whenever you're able, contribute the maximum. If you're not able to contribute the absolute maximum, at least ensure that you're contributing enough to benefit from any employer matching type opportunities that your employer might offer.
So Sheree, I got to interrupt you. So what's one of my key rules about retirement savings?
Never leave free money on the table.
That's right. Don't turn down free money.
That's
So if
right.
your employer is offering you a match, even if you can't contribute the maximum the IRS allows, at least maximize your employer's contribution or the
Yes,
employer's match.
absolutely.
Yes.
Absolutely. Another thing is for those individuals who qualify, definitely consider contributing to Roth accounts. Roth accounts can give you opportunities for long-term tax-free growth of your earnings in those accounts. So really beneficial. Lastly, you want to ensure if you are 50 or older that you take advantage of catch-up contributions. So for individuals 50 and over, you have the opportunity in those 401k and similar accounts to contribute an additional $7,500 each year. Additionally, this year, they've just come out with a new provision whereby individuals between 60 and 63 years old are actually eligible to contribute 150% of the normal catch-up contribution, so $11,250 additional So that's in addition to your normal contribution. This is just a way to assist individuals who get to that point in life and realize maybe they don't have quite the retirement savings they really hope they would have at this point. It gives you a really significant opportunity to increase those savings.
It really is a big deal. And I'm surprised, Cheri, how many people we talk to who aren't aware of the catch-up opportunities.
Mm-hmm.
And then to your point, there's actually some even newer rules for people who are even closer to retirement to catch up even more, right? So these are important things. And if you're not familiar with these, it may be worth either Googling and learning more or giving us a call to learn more. But these are key advantages that people have to help them prepare for retirement.
Yes, absolutely. Absolutely. Another thing, and for 2024 tax year, it's a little late for this, but something that you always want to consider in your tax planning is taking advantage of any tax harvesting opportunities that you may have, tax loss harvesting, sorry. You want to, especially if you have high gains during the year, look for any opportunities for other investments whereby maybe you had losses. And so you can offset some of those earnings and thus reducing your tax bill. So again, something that you would have wanted to have done by the end of 2024 for last year, but definitely an opportunity to continue to look at going forward.
Yeah, very good.
Another is to, you want to maximize your deduction and credit opportunities. A lot of people do end up taking the standard deduction. However, it's always beneficial to still go through, especially if you own a home and you have a mortgage interest deduction, go through the itemized deductions and tally it up and see what it would be. And then you're just going to compare that against the standard deduction and then select whichever one is most advantageous for you. Additionally, you can take advantage of any tax credit opportunities you have, things like the lifetime learning credit or child tax credit. The really amazing thing about these is they come directly off of your tax bill, not off of your income. So making, really reducing your tax burden that much more. Yeah. Lastly, if you are a business owner, you want to ensure that you are tracking and claiming all eligible business expenses. Throughout the year, you want to do things like track your mileage, any travel expenses, office supplies, those type things that you might purchase. And then if you have a home office, if you work out of your home, you want to ensure that you are getting the optimal deduction for that as well. One of the things that I really like to do and recommend to my clients is to really try to separate your business and personal expenses. This can be done by having a personal and a business bank account, as well as separate credit cards. That way, when it comes down to the end of the year and time to gather these documents together, it's really easy to really separate those that are the business expenses that might come off your Schedule C or such for a small business, allowing you to really optimize that.
Okay. Hey, Cheri, you covered a lot of good topics today, and so appreciate you taking the time to prepare this and cover so much detail. But I would say if you're watching, if this seems overwhelming, or you feel that you're potentially leaving some tax savings on the table and you're not really getting back as much as you hoped, or that you're paying more taxes than you should, it's really not a bad idea to consider working with a financial planner or a financial advisor. At Client First Capital, tax strategies are one of our core competencies, and we help people prepare and optimize their taxes so that they're always compliant, but they're also not paying more taxes than they need to.
Absolutely.
And so, but if you want to know more about us, you can find us at clientfirstcap.com. And there you can learn more about our firm, what our services are, learn more about us, each of the individuals in our firm. And at the same time, there's links to articles and videos where we cover a lot of different financial topics. So, Cheri, I want to thank you for giving us such a good video today.
Well, thank you. Thank you, Cary, for joining me.
All right. Thank you.